Using a number of on-chain data points, we can now accurately determine the amount of capital inflows required for Bitcoin to rally to $100,000 or even significantly higher. And it might be a lot less than you think. Today, we're going to be looking at the Bitcoin inflows required to reach $100,000 or more. And this video is going to be somewhat technical, so I've had to put my glasses on for this one. So we'll start on the Bitcoin realized price chart here for BTC, which is taking into account the average accumulation price of all Bitcoin on the network, or the cost basis for all holders. This is just aggregating every single BTC moved and the price it was moved at. So we can see that the average BTC was accumulated at just over $30,000. What we can actually do is use metrics like this to see how much inflows are coming into the Bitcoin network and the actual impact that has on the Bitcoin market cap. If we go to this article here by CoinDesk, it states that the Bitcoin ETFs are driving a spot multiplier effect. And this article by Block Force Capital goes into a little bit more detail about this Bitcoin multiplier effect. And it summarizes it very nicely here. The fact that most people thinking that $1 million inflowing into the Bitcoin market is going to increase the Bitcoin market cap. But that isn't the case. 1 million of capital inflows into the Bitcoin market actually increases the market cap significantly more than $1 million. Now, there are lots of different ways people are trying to calculate this money multiplier effect, but I thought I'd give it my own go. So the way I've actually done this is looked at the short-term holder realized price, because rather than looking at the cost basis of all BTC on the network, really, if we're looking at new inflows into the market, we need to be looking at the impact of new market participants, and where better to look at than the short-term holder realized price. So if I just go to this Google Doc here, I've actually utilized the Look into Bitcoin API, which I definitely recommend checking out if you have a site subscription. And if you don't have a site subscription, I definitely recommend checking that out. We recently did a video explaining how you can best utilize this API very simply and quickly, just to kind of grasp and have a play around to maybe create your own metrics or do data analysis like we're doing here today. So what I've done for this is pulled all of the data from the short-term holder realized price, as well as the data on the realized price, just so I can get the circulating supply and underlying price of BTC. So we can see here all of the raw data from Look into Bitcoin that we can then manipulate in our own way. And if I then go onto this sheet here, what we can do is look at the market cap of Bitcoin, or the price multiplied by the circulating supply, and see the percentage changes in that, as well as the short-term holder realized cap and the inflows and the percentage change we see from that. And once we actually have this multiplier effect, what I've done is given us a yearly average. Not just a mean average, but a median average, because there's obviously going to be days where there's a huge money multiplier effect and days where there's a maybe negligible money multiplier effect. So if I just take a yearly average of this median, then we get this money multiplier valuation of 8.32, which indicates that for every $1 inputted into the Bitcoin network, price increases $8.32. Well, the market cap increases by that, which is pretty significant. If you just imagine the amount of capitals that have come in from the ETFs, institutional buyers, retail coming in, knowing that every dollar that they put into the Bitcoin network is increasing the price, increasing the market cap by 8.32 times, is pretty substantial, especially taking into consideration that this value is continuing to increase. It was only a few weeks ago that this value was around 6, then 7, now over 8. So this is continuing to increase. Now, this is likely due to the increasing illiquidity of the Bitcoin network. We can see that the amount of BTC available for short-term holders is just continuing to decrease every single cycle. But if we scroll up here and use this 8.32 figure all the way to the top, we can actually scroll across here and say, if we want price to increase to $100,000, I'll just zoom in a little bit more here so it's maybe a bit clearer. We want price to increase to $100,000. That would require a market cap of $1.97 trillion. So nearly $2 trillion market cap. And the current market cap, which is $1.35 trillion, would need to increase by $624 billion. I know this is a lot of numbers, but if we want to increase the market cap by $624 billion, taking into account that money multiplier valuation of 8.32, then we need $75 billion inflows, or 1 million BTC approximately at the current price of new money coming into the market to rally BTC to $100,000. Now, I know what you're thinking. A million BTC needs to be bought, nearly 1.1 million BTC. That sounds an astronomical amount of inflows. But if we look at the amount of BTC that has actually changed hands already during this cycle, just looking at the short-term holder supply, which bottomed out only a few months ago in late 2023, just beneath 3.3 million BTC held by these short-term holders, to where we are now to nearly 5 million BTC. So that's 1.7 million Bitcoin that's changed hands from these long-term holders to these short-term holders in just a few months. And considering this bull market may have 6, 12, 18, 24 months potentially left, that's a lot of time for these Bitcoin to transfer from old hands to new hands and allow new capital to come into the market. Also, if we consider the ETFs, like we've mentioned, these are already having a massive impact on the Bitcoin market. We can look to IBIT, or the BlackRock ETF offering, to see that they have nearly $20 billion in holdings already, and they've only been around for a few months. And in total, I'm not sure if you can see here, across all of the Bitcoin ETFs, we can see there are total holdings of around 840, nearly 850,000 BTC. So suddenly this 1 million BTC figure doesn't sound that astronomical. And if we, again, take into account that 1.7 million chains in the short-term holder supply, we can actually maybe start looking to slightly higher prices than $100,000. If we go to $120,000, for example, we can see that this almost aligns with that 1.7 million BTC input. So if we were to just replicate what we already have done since late 2023, a price target of $120,000 per Bitcoin is actually fairly reasonable. And if we look to previous cycles to see the change in short-term holder supply, where we can see in the 2020 we went from around 4.2 million BTC short-term holder supply to about 6.6. That's 2.4 million BTC. We could just play around with this number here, assuming the money multiplier effect stays constant, which there's a good chance it's actually going to continue increasing, that we can see there might be a Bitcoin price of between $130,000 and $140,000. If we go back to the previous cycle, the 2016-2017 cycle, which currently is giving us the most similarities, the most parallels with our current cycle, this short-term holder supply increased from around 4 million at its lowest point to nearly 8 million, increased by 4 million BTC. Now, that might be a little unrealistic to assume that much BTC transferring hands, especially considering how illiquid BTC is. But then if we also consider the money multiplier effect is continuing to increase, if we were to look to even higher prices, $200,000 for example, it doesn't seem impossible. It seems within the realms of possibility to have this much capital inflows on the Bitcoin network, which would result in astronomically higher prices than we see today. Also, if you haven't already, please don't forget to like this video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on lookintobitcoin.com, your number one source for Bitcoin information. So just to summarize, looking at the Bitcoin multiplier effect, we can see how much the market cap increases for every dollar of inflow of new market participant capital. Now, of course, this is a bit of a rough, crude calculation, but really there's not many better ways to really figure this number out. And I definitely think using the short-term holder inflows, the median valuation and impact on that across a yearly average is probably a pretty good indication of what we can maybe expect to see, and is definitely in line with the percentage increase we've seen just from the ETF launch just a few months ago and the positive impact that had on the Bitcoin market. And we can currently see with around $100,000 price target that we need about 1 million coins, 1 million BTC of buy pressure transferring from long-term holders to short-term holders to really reach that level, which does sound a lot. But once you consider that in 2024 alone, well, including the tail end of 2023, we've seen about 1.7 million coins worth of market inflows. It's not that unreasonable. And if we are to see the same again in this cycle, that'll rally Bitcoin to $120,000. And like we could see, if we're to see something comparable to previous cycles, then we could be looking to $130,000, $140,000, or maybe even close to $200,000, which is of course incredibly bullish for BTC. And this is assuming that the money multiplier effect stays constant. What we could see is from the past few months, this is continuing to increase as Bitcoin's illiquidity increases, as long-term holders refuse to take substantial amounts of profit. And considering we've really not seen the big euphoric retail rush into the markets yet, there is a huge amount of potential for the upside of Bitcoin's price action, and there's no reason to be bearish. This is incredibly bullish. Really, I shouldn't have worn the red hat today, but I don't have a green one. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to professional resolution charts, advanced macro and portfolio data tools, in-depth crypto industry reports, live and personalized indicator alerts, private TradingView scripts, APIs, and more, all for a fraction of the standard industry price. Especially that API access that we use today is just a fraction of what you're going to find anywhere else on the market. Direct access to all of the raw data, to do your own manipulation like we did today, to play around, make your own custom original indicators and metrics. It really is incredible value for money. And let me know in the comments down below, do you think that I've maybe been a little bit too optimistic? Do you think I've been unreasonable? Or do you think that maybe I'm underestimating how positive an impact this money multiplier effect is going to have on the Bitcoin price? As I said, let me know in the comments below and on social media. I look forward to reading and replying to all of them. Thank you all very much for watching, and I'll see you in the next one.